Welcome everyone, let's get going. And of course, one of the best charts at the moment here is the gold. So understandably, given the geopolitical situation, i.e. the war in Israel, I've been tracking this gold for ages and started buying down here. Got in a little bit early at first, but corrected that on Friday. So we've gapped up. So the obvious thing to do is to sit there and wait for something like 8.25, 8.30 for that to close the gap. Gaps do not always close that quickly. It is possible they may keep that open until a later date. But if they do close that gap around about the 18.25, 18.30 mark, I will add to my position. In the meantime, oil. So let's just kick off with the commodities. So we saw this drop from 94 just above the 80 mark. And of course, being the Middle East, the oil has gapped up. So at the moment, I would suggest, or my target is to look for 82. To take that back up to 94. In the meantime, I think if we hit the underside of this sell zone, I'm going to start to short again. If we get up there, if we close the gap and then get up and get a sell signal up there, I will sell accordingly. Indices, of course, have gapped as well. US is closed today, Columbus Day. So let's just see what we get tomorrow. I am looking to sell the high. I'm looking to sell something like the Friday high. Ideally 760, 33,760. I don't think this is done. I think what we've got here on a pure technical level is so we've got a lower high, lower low, lower high, lower low. That's not a lower low anyway. Lower high, double top, as we retested that previous high, and then we sunk. So we've got 1, 2, 3-way correction, 1, 2, 3 into that resistance area at 35k, and then into this support down there at 32,800. Now I'm looking for this to tap into this resistance up here around about 33,800, and then so reconnect with that 20-day average, and then start to potentially come all the way back down to February lows. I'm going to be wrong. So I'm bearish. We got US earnings around the corner, but that's what I'm looking at the moment. Let's look at the FTSE. So considering what we have seen in these markets, this has been very resilient. So these lows are held. These highs have sold. So we are basically, we're now in a big box. So this area here, which is 7,200 and 7,700. 7,700 up there. Sorry, this pen's slow. And then, so that's that high. And 7,200 down here. So if we get a lower high into that 76.80 area, I would short, because if we then break that support through and through, I'm suggesting if we come back nice lower high into that 76.70, get a sell signal, and then I think this will break or come out of the box and potentially come right the way down there to 68 and lower. In other words, I am looking for a lot of weakness, and I think the UK is going to go into recession. And I think that is a good place to start. If I'm wrong and we start breaking above the 7,700, then I would look to short the 8,000. Right, so we talked about oil, talked about a couple of other commodities as well. Get an update on copper. The copper's breached the support and turned around. It's gone down into this May support. So I'm still in it because I kept my stop out the way. So I'm gonna buy these lows and keep my stop underneath that 78 because I like copper a lot. In some people's eyes, it's the new oil, and I am of that view as well. The wheat has been a tough one. I am happy to buy these dips, but I do need to get out if we break that $5.5. Corn's been a lot better. I think any pullback, if we see $4.70 again, I think that is a buy. My view is on these commodities is that the fundamentals have been very bearish. In other words, there's been plentiful supply. I think these markets are bottoming. I think the next season is going to be different. So you've got hold, higher close. So if we dip back in there and hold, I think all of this will then rise and then we'll start to get back up. If I'm wrong, happy to be wrong. Well, I don't want to be wrong, obviously. We're going to come in under 470 and we're going to find $4 pretty quick. If I'm wrong, I don't believe I'm wrong. I think because of, not because I think I'm a fantastic analyst, because I believe that this is a very strong pattern. Okay, stocks, keep it nice and simple. Let's look at the Barclays. So I want to look at the bellwethers. What are these bellwethers doing? Let's get rid of all this pink. Why is that smothered in pink? Let's just clean this one up because it's important to really get our heads around Barclays, I think. Right, so this 140 you can see is a huge pivotal support. If we come down and find 140, see, I think that could hold. But if we close on the 140, I'm bearish the UK market. So you've got, why am I so bearish? Well, this is one this is a bellwether. Lower high, lower low, lower low. So if this fails and we come under 140, I'm not shorting this, by the way. I'm just suggesting this is the path of least resistance. If we come down here and break and can't hold that 130, I think that's toast. If you want to short something, I would short a weak stock in a weak sector. I would not short something like Barclays. A quick look at Lloyd's. If you want to short something, I would go to the retail sector and short highs in the retail sector. Let's look at I think this is shoe zone. So we topped out at 254. I think this will break. We close underneath that 207. I think that's going to tumble. Anyway, let's look at something. Let's look at Sainsbury's. Struggling. So again, low high. I think this is a head and shoulders. I think we've got shoulder, head, shoulder. Here's the neckline, which we broke up here at 270. Close on the 250. And again, I'm not shorting this, but close on the 250. And I think it's going to wind down. I think it's going to unravel a lot of this big move. So we're down there at about 160. We've seen 290. I think this is going to at least unravel to at least 220 and easily £2. If I'm right about the UK, we'll come under £2. Now, I'm not suggesting this is going to happen quickly. I'm suggesting this is into next year. Tesco is, I'm guessing, pretty similar. Now, that's had a better move last week. Primark, Associated British Foods, struggling, coming off. Same situation. Let's look at the market I do like. Basic materials. We've got Elementis, chemicals, pullbacks, I think, to be bought on that one. Man Group. I think this is a decent pullback. It's a very healthy bar here. I would buy that close to £2 if given the chance, if I am given the chance. Glencore, let's get rid of that drawing. That pullback's been bought. Rio, I think that's buyable at 448 on Rio. All right, let's look at miners, and then I'm going to call it quits. So with gold behaving like that, this dip into 13 has been bought. So if we come out of, if we close above 15 here, I think we can start to climb. This is a head and shoulders. There's the neckline. We've come back to test the support in the neckline. So close above 15. So I think this is viable at 13.5, 14. If we subsequently close above 15, I think we can climb back to those highs. And this is the kind of climate where you want to be in something like gold. Let's look at Griffin, some of the other miners. That pullback looks as if that's been bought. Hochschild not doing it. That could come down to 70, 75 at least. Some US, I think all the metals, copper. This is a silver miner in the US. The volumes are improving. If that one closes off 240, I think that could attempt to push back at least into $3 plus. Sorry, 300 plus. Sorry, that was $3. This one here, HL, huge support. I think that's buyable at 370 with a stop underneath 345 to see if that one can pick up. All right, so I like the miners, I like the commodities. I do not like anything to do with the retail consumer exposure. And I think this market, it was already struggling. This is Taylor Woodrow, Persimmon. So if Persimmon breaks this recent low, I think that could get another leg down. All right, so be careful out there is my message to you. and I will update you on the US earnings season and talk to you about what I'm doing as the week unfolds. All right. Thanks for your company, and